Okay, so here we have a list of some of the best performing bonds and ETFs over the year of 2024. I'm not going to dive into each one of these. I'm more so just going to cover what the expense ratio means here. So for those that don't know, the expense ratio is essentially it's a fee that you're going to pay once you have invested X amount of dollars into one of these bonds or ETFs. So, for example, we'll take a look at Vanguard Total Bond Market ETF. So that has an expense ratio of 0.03%, which is very good. You want to have a very low expense ratio so that you're not going to be paying a massive fee once you have invested a certain amount of dollars into this ETF. So we'll compare that to the Amplify Samsung ETF, the third one on the list on the left. That is an expense ratio of 0.20%. So there is a fair jump in expense ratio percentage from the Vanguard one. But one thing to keep in mind is that these ETFs and bonds, they're going to be covering different things. So just do your research, pick which ones you like the most or which ones that resonate the best with you. And then the expense ratio will be almost like a helper to help you decide which ones, because again, that is a fee that you're going to have to pay once you have invested a certain amount of dollars into one of these ETFs and bonds. So here we have a list of the best performing stocks of 2024. I know I briefly went over this in the last video, but for today, we're going to more so just focus on NVIDIA and Palantir. Now, I would consider those two stocks to be growth stocks simply because of how much they have grown over the past year, which is 2024. Both are part of the tech industry, massive tech companies. Both making chips for AI and that sort of stuff. But yeah, NVIDIA had a massive increase of 168.1%, and then Palantir, almost like the little brother to NVIDIA, they had an increase of 142.1%. So based on your current asset allocation model, if you want to have a bit of a riskier model, you could decide to invest in those. Just because of how much they have grown over the year of 2024. Now, in the next few slides, we have a list of some of the companies that we have been doing some research on and that we will be keeping an eye on moving forward. So again, these are just companies that we've been doing some research on, but I'll go over them briefly here. So Intel Corporation, part of the tech industry, massive market cap of $105 billion. They also have a dividend yield of 2.05%, which means you will be getting money back from your investments on those, which is great. They saw an increase of 9.14% over the month of November 2024. Analysts are saying that this stock is currently undervalued. Could be a good buy. Could be a good buy in a risky investment portfolio. Maybe not so much for a conservative investor. But one thing is that revenue is the most stable that it has been in years. But the current earnings are weak at the moment. Now we have Atlassian Corporation. They are part of the tech and software industry. Their market cap is currently sitting at $62.5 billion. No dividend yield for this one, but they did see an increase of 26.77% in the month of November 2024. They are a leader in the enterprise collaboration and workflow software. They gained 35.9% in the past year, even though that is a underperformance based on the S&P, mostly due to the competition that they have with Microsoft, Alphabet, which is Google, Broadcom, Salesforce, and IBM. Next up is Charter Communications. They are in the telecommunication and media industry. Their market cap is at $55.39 billion. They also did see a solid increase in the month of November 2024, almost at 18%. Charter Communications, they are buying Liberty Broadband in an all-stock transaction, which is going to be finalized in the year 2027. TV services are declining due to streaming services and other forms of video entertainment, YouTube, Netflix, Crave, those kind of streaming services. But this company does rank 11th on the list of best long term investments, according to none other than Mr. Warren Buffett. Lululemon Athletica, they are in the retail industry. They have a market cap of $39.29 billion. They had a slight increase of 8.77% in the month of November. Sales have been down in the Americas and China, mostly because of a lack of sales in the women's articles, but they do have a plan in place to help generate more sales on those articles. They do have some competition from other fitness companies, largest one being Aloe, but they have begun to rebound after a bit of a nosedive at the beginning of 2024. Waters Corporation, they cover a few different industries, retail, tech, software, and pharmaceuticals. Their market cap currently sits at $21.28 billion. Not much of an increase, only 1.27% in the month of November, but they did absolutely crush Q3 expectations, up to 20% in recent months. Madrigal Pharmaceuticals. Now, this one has been a big one over the past year. They are in the pharmaceutical industry. The market cap is $6.29 billion, and they did see a pretty hefty increase in the month of November 2024 at 33.85%. Mostly because they found a treatment for a fatty liver disease called MASH, and that has also gotten a FDA approval. Shares of Madrigal have increased 39.03% over the past quarter and have gained 135.91% in the last year. So definitely one to keep an eye on. Lumen Technologies, part of the technology industry, market cap is at $8.67 billion. Again, this company saw a huge increase in the month of November, 36.86%. Now, that was because of a massive investment from some of the tech giants, such as Microsoft. They received a $8 billion investment from those companies. Halozyme Therapeutics, part of the pharmaceuticals industry, market cap is $5.81 billion. Now, they did see a decrease in the month of November 2024. But the company that they did buy, Evotech, their shares went up almost 20% after Halozyme bought them out, which leaves projections for the future to be trending upwards.
With that being said, the models that we're looking at here that we've talked about, the ideal ones for beginners would be balanced or conservative. So the one in the middle here on the right, even wanting more risk, just to start out, our opinion is you want to maybe maximum go to the 60-40 strategy, just so you can see what your money's doing for you before you try to look into the rule of 100 or the risky model. Now, give yourself a few months, and then from there you'll see, okay, now I can try to take more risk on depending on my performance. On the right here, you'll see we have some of the bonds, stocks, and mutual funds that Cold highlighted earlier, but this time it's condensed into some of the better performance and varying in industry, specifically with stocks as well. With that being said, you have some of the best performers, but you want to group these into a model. How you do that is you simply take a dollar amount total that you'll be investing or wanting to invest. And then from there, you want to divide it by the indicated percentages. For example, here, 25, 25, 25, 25%. You want to just take your money and divide it by 25% for, let's say, stocks. That should give you the indicated amount for how much you need to be buying for stocks, for example. Now, from there, once that's complete, look into some of the best performance that we have here. You can find this on Google. Again, this is just a recommendation, not advice, and just personal opinion, just to highlight, because it is, important to highlight and mention that. But on the right here, you'll see some of the best performers, and you can see you can group some of these into the models. Let's say the balanced model, you'll take 25% of bonds, 25% of stocks, and then your mutual funds is going to be 25%, and then you want to remain cash, just because you always want to have cash, in my opinion, just for an opportunity that may arise and you want to invest into it, as we've said countless times. Now, with this being said, what you want to see here is that once you put your money in, before you do for stock specifically, keep what you buy and diversify with industries, and don't put all your eggs in one basket, and that would help you out. Now, since we've introduced and shown the concept, if people don't know about the asset allocation modeling and how it works, how to group it, some of the better performers and some of the varying models, we'll find in the next video is us using exactly what we're looking at here to do a form of paper trading or real trading, and then showcase how that performance is, so that you can see it from us before you possibly even do it for yourself. But we're just trying to showcase opinion on how people can still do a lot with the money, and you can grow yourself as an individual, especially if you're just starting out. Thank you so much for watching this video. Wanted to keep this nice and short. If you have any questions, please put in the comments below.